Good morning. It's Vijay here. Today is Friday, 30th of August, 2024, a beginning of a new settlement, a beginning of a new week for the weekly settlement, and just a precursor for a September, which will be very, very volatile generally. Now, yesterday was the close of a settlement, which was a 5 week settlement. As I'd mentioned, analysis shows in the past that whenever there is a 5 week settlement, the bulls will always prevail. Though in the initial period of the settlement, because of the end carry trade, the markets collapsed from 25,000, they went down to 24,000. But the bulls fought back and closed at an all time high. So even though there are a lot of jitters yesterday, now yesterday's moves were completely, what shall I say, off the radar for many people. Now, I don't want to take too much credit, but this was expected because you see, the market had to close on the brighter side with a high probability. Nothing is certain in markets and in life, but one was prepared for it. So one bought on declines and one waited with patience, and one could make some profits out of yesterday's moves. However, yesterday's moves were a horrendous moves for a lot of option traders who employed complex strategies like straddles, strangles, your and others, butterfly, iron condor, uh, bear spread, bull spread. I mean, you name it, people are now talking of those strategies as if they are very easy to make money. Incidentally, my experience with option trading is that very rarely will you make money with these complex strategies. At best, you may break even or make very little money, but the probability of losing is there. And you will think that you have to keep on modifying the strategy with employing different kind of algos, and you end up almost at the same place or a little lower than where you started. So therefore, we don't do options. We do futures. We do mostly in cash. So that's where stability is there. If you pick and choose the right stocks, hopefully you'll be able to get about 15% per annum, which is pittance for a lot of people who have made 20% in a day. But for us, we have seen that 15% is big. Incidentally, the biggest or the most popular mutual fund, PPFAS, that Parag Parikh Financial Services, which they started in 2013 with 150 crores. 2013 was the depths of the stock market depths, because the rupee was weakening and stocks were going nowhere, and the inflation was high, governance was poor, policy paralysis was there. They started then 150 crores, and now they are 75,000 crores, and their CAGR is 19%. So they have, and that time the Nifty was 5,000. Today we are speaking of Nifty 25,000. So what does it mean? It means that even the best of the people buying it at the worst of the times or at the bottoms, and if you look at where they are in the top, so you are comparing very good fund managers buying at the lows and waiting for 10 years, 11 years, and then at the top, and the top means the all-time highs, the NAVs show you a 19% CAGR. So to get 20% CAGR in the market for over a period of 10 years is a dream which all of us have to aim for, not more than 20%. In fact, Rakesh Jhunjhunwala, the big bull, used to talk about, if I get 19%, 18, 19%, I'm a king. And if I get 21% CAGR, then I'm the emperor. Incidentally, Rakesh Jhunjhunwala has, recorded CAGR is about 22%. Warren Buffett's is about 28%. So that is the kind of returns we're looking at. I think people want to get rich overnight. And yesterday was a disaster for a lot of people, and a lot of people would have been thrown out of the market. The market, however, will continue to chug along, in my opinion and analysis. So September should be a good month. It'll be it'll be a volatile month. May not be as volatile as August. August was extraordinarily volatile. September may not be, but I expect September closing to be better than September opening. So today is a big day. Yesterday was a big day for Reliance, which surprised us with 1:1 bonus. Yet many people were skeptical. They sold that, and I think now with cooler minds, I think they will get into buying into Reliance. Reliance should be the bulwark of the market now, and if the market has to reach 1 lakh Sensex by Pongal, as I'm thinking, that is by January 15, then Reliance and HDFC Bank should lead. So yesterday was Reliance's turn. Reliance is established as to the stability in prices and where they will go next in terms of what their projections are. HDFC Bank has got one good chance today because today is MSCI rebalancing of about 13 stocks, and HDFC is going to get a passive inflow of about $1.5 billion, which is one of the highest inflows. In fact, $5 billion of passive inflows will come from FIS today by close of day. So you can expect huge volatility in the last 1.5 hours. There are about 8 stocks which are coming in: HDFC Bank, Dixon, Idea, Zydus, Oil India, Bharti, RVNL, Prestige, and Oracle. These are the 8 stocks, 9 stocks which are coming into the index. 4 are going out: Bandhan, Maruti, Reliance, and Infi. When I say going out, I'm thinking the weightage will come down. Now, Bandhan goes into the MSCI Small Cap World Index, where the another 27 stocks are coming. So there, Proteon, Paras Defense, Go Digital, these are the stocks which are coming into the small cap index, which is also getting rebalanced today. So all in all, in the MSCI, India now is got the biggest weightage of 20%. And what we are getting in $5 billion today is a record amount of money which is coming in. So there is no need to be afraid or bearish, because this is the kind of money which will hold the market. This is FII money. We were all looking at DII money. Now FII money, passive money this is. So it's not going to go out so easily, because passive money is basically long-term money. So this is something which I don't know whether people have recognized it. I think they will recognize it when they see the prices steadily going up and with a floor for the market. So that is as far as MSCI is concerned. It's big. It's really the biggest this time. So I would say one should look at those stocks which are there as going to come as a part of the MSCI index. Now, yesterday, if you see the FI and DI figures, they seem to be both positive. I don't pay much attention to the month-end figures, because you see a lot of arbitrage funds of FIs need to buy, sell, and so those figures which are not really reflective of exactly what the interest of FIs was yesterday. But suffice to say, FIs interest will be enormous today, of $5 billion. Remember, $5 billion is a record for India. Now, what happened globally? The European markets, DAX hit an all-time high. Dow Jones hit an all-time high. NASDAQ, Dow Jones was at one point close to 500 points up, but closed at 234 points. NASDAQ also was close to 200 points. It is closed in the negative. S&P closed flat. The reason being that it was NVIDIA which brought the entire tech sector down. So it was buy on rumor, sell on news. And yesterday, a lot of ODT position, the zero DTE position, that is basically option expiry was happening for NVIDIA in a very big manner. So a lot of call options were bought, and the strong guys finally made money, where NVIDIA closed about 8% lower, though at one point of time it was only minus 2%. So yesterday is yesterday, and today is a completely new day. I expect now it one fundamentals market will look at, and this evening you will have the GDP numbers. I think the GDP numbers will be better than what market is expecting. It's expecting about 6.6 or 6.8. It should be better than that. That will come only after market hours. And yesterday, I think Moody's has upgraded India's GDP from 6.8 to 7.2. It's big. Such a big increase. And that means our macros are good as far as Moody's is concerned. Moody's is the most pessimistic fund house rating agency on India. If they are able to jack it up to 7.2, then I think you'll get stability. See, what this market needs is stability, not just momentum. Either on up or down, momentum is harmful, as we've seen yesterday. But stability is what we look for. Long-term investors look for stability. I think we are getting that stability through all these things, MSCI and your Moody. So that is as far as MSCI and Moody is concerned. Today, Japan has opened bright. Incidentally, it opened very negative, deep negative. From there, now it has gone about 200 and odd points. And our favorite friend, Hang Seng, which is a cousin of HDFC Bank, both of them don't perform. Hang Seng started performing today. It's up by about 250 points. And so it's a cue for its cousin, HDFC Bank, to perform. So therefore, today will be an exciting day, especially in the last 1 hour. And I expect significant moves in those 9 stocks which we discussed, especially on HDFC Bank, which has been a laggard. I think HDFC Bank time has come now, and we should do well. Incidentally, we hold HDFC Bank, Reliance. We are fully invested, and the large cap should perform better than mid caps and small caps, as I think it is. Yesterday, for instance, advance declines were hugely higher than advances, because most people are now getting out of the momentum stocks and the small caps and the mid caps. So therefore, there will be a churn from small and mid caps to large caps, is what my analysts say. So it's better to be with large caps. Your gains may be less, but your losses also will be less, unlike small caps and mid caps and micro caps, where the exits are few and far between. There are still good stocks. We still hold some small and micro caps also. It is not that everything is bad, but you'll have to pick and choose. You can't randomly choose anything and hope to make money, which one did these many days. Please note, I'm not a SEBI registered advisor. And if this analysis appeals to you, please like, share, and subscribe. This is Vijay here, signing off. Please have a wonderful trading day. Thank you.